Hello students. Yes, so in my previous video I had explained on what is investment decision is all about, what is the purpose, how it plays a crucial role in the organization, and what's the importance of the investment decision. So in this video I'll be explaining on the important, very important terminology, that is a capital budgeting. Again, this is one of the important concepts from your exam viewpoint, right? So now, what is capital budgeting is all about? See, capital budgeting, it is said to be the firm's a formal process, that is in order to acquire and invest the capital. See, I've told you, financing decision, it comes first. Financing is where you worry about from which all the sources you can acquire, from which all the sources you can raise in the money. After that, you give a connection to the investment. Once you have the money, now you're going to determine where all you will have to invest your capital amount, right? So it involves the firm's decision, that is again, as an investor, whether you want to go for the current investment or you would like to go for the fixed funds, that is a fixed assets, right? So it can be in terms of disposition, a modification, or a replacement of the fixed assets. You would take a particular charge on this particular aspect, right? So what is now capital budgeting is all about? See here, um the large expenditures, it includes something like a purchasing of the fixed assets. It can be the plant and machinery, the equipment, a land and building, right? Or else it can be replacing of the existing equipment itself, investing in the R&D, research and development, right? So the large amounts which are spent for these types of projects, it talks about capital expenditure, which is not like all the time you're going to get it, like yearly once or 3 yearly once. That's how capital, which is long term in nature, where capital budgeting, it is a tool in order to maximize a company's future profits. See, since most companies are able to manage only a limited number of large projects at a time, at a given period of one time, right? So the capital budgeting is where usually it involves the calculation of each project's future accounting profit by period and the cash flow by period, the present value of cash flows, that is after considering the fact, the concept of a time a value of money, where the time value of money, it states that the money what you're going to invest today, with this particular rate of interest attached with that, the maturity period, over a period of time, say for example after 3 years or 5 years, how your money is going to grow, right? So when you're talking about future value, you are worried where the interest is attached to that particular aspect, right? And if there's a kind of the project cash flow, that speaks about the payback, what will be the initial cash investment, by which year you'll be able to get your investment what you have made, and the assessment of risk, of course, and various other factors as well, right? So capital budgeting, we have a definition which is given by Lynch. He says that capital budgeting consists in planning the development of available capital, which means the financial manager, he is going to determine, he is going to lay down what are the financial needs, what are the funds which is required for the organization. He's going to draw down what is the need by determining the nature of the organization and the size of the organization in terms of the capital, right? So again, for what purpose? The main agenda is to maximize the long term profitability of the concern, for which the foresightedness is what we say, the planning is very, very important, right? And basically, what is this capital budgeting? See, it involves something called as the high risk, of course. Yes, you are dealing here with the long term assets of the company, and large profits are also estimated. I've told you, see, bigger the company, bigger the capital, then of course bigger the risk also. When you're taking lots of risk, of course the return should also support with that particular factor. And it is a long time, a period between the initial investments and the estimated return. See, I've told you, Investment is something which is subjected to the deferred consumption. Deferred consumption states that today I am going to invest 10,000 rupees. I can't immediately, have my return. I can't immediately expect a capital appreciation, in association with my capital. I will have to wait for the maturity period, right? So it is something like it's a long time period between the initial investment, that me as an investor, what I have invested, and what is the return I'm going to get in the future. So it is always like, it involves the project, identification and generation, for which I have to go. Then, the project screening and evaluation you will have to do, where it is something like, uh, you will have certain criteria, to judge the desirability of a proposal, right? So the tool of time value of money, it comes handy in this step, right? So then, as a financial manager has to think about the project, the selection, no, the different alternatives for raising, or pertaining the funds, that has to be, explored by the finance team, right? So this talks about the capital budgeting, right? Then apart from that, implementation is very important. See, money is spent and proposal is implemented, right? So based on that, so the different responsibilities, like implementing the proposals, completion of the project, it should be a, requisite time period, and the reduction of the cost is also very important. Then there should be a performance review. See, the final stage of capital, budgeting, it involves the comparison of, the actual results with the standard ones. This is something like, what was your expectation? Are you now able to meet your expectation or not? Fine. So the topic, what we shall discuss now is, what is the importance of a capital budgeting? Why capital budgeting is important? How it is playing, a significant role in the organization. So the first point what you have is, the huge capital. Now what does huge capital talk about? See, funds are limited, right? With the fund, and demand of funds is more in long term project, that you all know. See, due to huge amount involved in the capital expenditure, proper planning is mandatory. Proper planning is always a must, because you are going to deal with the huge capital of the organization. The next step what you have is change in decision. See, capital expenditure decisions, they have the long time span of investment. So these decisions, once made, it cannot be changed like easily without any kind of loss, right? So there should be a change, flexible enough. The degree of, flexibility is very important. The next what you have is the long term effects on profitability. See, the capital budgeting decisions, they have a long term effects on the profitability of the concern. See, it affects what, the future growth sales, and the volume of sales involved with that. So if the proper decisions, if they are made or taken at a proper time, then, the company can earn lots of profits, right? Then you have difficulties in long term investments. Now what does difficulties in long term investments talk about? See, it is very difficult, to take up the long term decision, like, because uncertainty of future and the higher degree of risk is involved. Because here, you as an investor, you are dealing with, the long term investments. Basically the future is uncertain, right? So you have the factor of both risk and uncertainty, right? So the next point what you have is a proper utilization of funds, that's of the shareholders. What does it mean? See, these decisions are absolutely, very important, as as these are going to provide the proper utilization of funds of the shareholders. So the main role of this, it is to avoid like over and under investment. I mean to say, there shouldn't be like, excess of investment. If you say 10,000, it shouldn't be like 12,000 or 13,000. It all goes idle, right? You don't know how, because you have just planned to 10,000. What if that 2,000, 3,000 goes waste, right? It becomes the improper planning. What if there is an inadequate, see, say for example you want 10,000 but you have got 8,000. What happens? Inadequate, where you can't meet your obligations, right? So always there should be a proper utilization of the funds of the shareholders. Then the national importance. See, these decisions, which are taken by the individual firm, in the benefit of individual plus the nation as well, because it is going to provide, the employment opportunity, where there can be a growth of the nation, where overall the economic activities can also stabilize, right? So this talks about the importance of a capital budgeting, right? So what now you have to understand about capital budgeting is that, which actually gives, emphasizes on acquisition and investment of the capital, where, it gives, the financial manager how he has to invest in the current fund or the fixed assets, in terms of doing any kind of modification, purchasing of asset, or the same replacement of the asset, fine. So capital budget, it acts as a planning a tool, where the purpose is to maximize the long term profitability of the business concern.